Once again, welcome. Let's continue from where we stopped last time. So the last video talked about candlesticks and the candlesticks pattern. So I was able to show you candlesticks that we have two major types, bearish and bullish candlesticks. And today we're going to continue on the candlestick patterns. So I will talk about 2 or 3. You can do further research on that. I will talk about 2 or 3 popular ones. Excuse me. So I'll talk about the hammer or pin bar. The hammer or pin bar. Now, of course, you know hammer look like this, and it has a little wick up there, very little. If you don't look, you will not even see it, something like this. So now your hammer and pin bar can be either bullish or bearish. So it can be either bullish or bearish. So you can have either a bullish or a bearish hammer. So let me just draw the both of them. Sorry. Let's change the colors to this one to green. This one to green. Everything to green. To green. So now, this is called the hammer. This is called the hammer or pin bar. Hammer or pin bar. Now this is a very powerful candlestick pattern. If you see any of these candle at a support level or a support zone or a discount zone, any which way you're looking at it, it signals that the bearish trend is about to end and the bullish is about to start. So what does this candle represent? So sellers push the market down to this low, then buyers push it up back, then price opened at this point, then buyers pushed the price up a bit, then sellers came in and the price closed like this. Likewise this. If you see now, this is typically how a bearish market looks like. So a bearish market looks like a sweep to the upside, a record structure, social liquidity, record structure, back to this place, down, the same thing, sweep, this go like this. So you getting what I'm saying? So please don't mind my drawing. So like this. So now you will expect, okay, this has been a bearish move. Now if you see any of this, maybe here becomes a support. If you see any of these here, it becomes a support. If you see price comes to somewhere here and you see any of this thing at this place, a rejection like this with this candle, is signifying that it's as though buyers wants to come to the market. So from here, what you may likely see now is something like this, down, a sweep, record structure, liquidity up, down, and voila. So you can see. So if you see such a thing around this area, know that okay, probably move from being a sell to being a buy. So that's one of the signals you look at. So that is one of the candle patterns that is popular, that is mostly used as a signal for a buy or a sell. Of course, the reverse, the dragonfly, the reverse of this. So, but let me talk about another one. I want to talk about the important things. The second popular one is bullish and bearish engulfing. Bullish, bullish, or bearish engulfing. So, for example, when you see price do like this, so you see, for a bullish engulfing, when you see price has been selling, 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 selling for a long time. So maybe they've been sell candles like this. Let's just duplicate this. Sorry, don't worry, I will show you chart examples. So this is typically how a bullish engulfing looks like. So once they've been bearish for a long time, then suddenly a big bullish candle covers up the bearish candle. We see price has engulfed the bearish candle. It's a signal at the support level that buyers are coming to the market strongly. Likewise for the bearish engulfing, so we see price have been bullish. Price have been bullish, hitherto. Then all of a sudden, at a resistance level or a resistance zone or a premium zone, you see price do something like this. Engulfs it. So when price engulfs it, a bearish candle engulfs the bullish candle at a resistance level or a discount level. Sorry, at the premium level or resistance zone, we say the market has become bearish engulfing. So basically, these are the things you need to look out for on your chart. So basically, let's look at chart example. So look at chart examples now. Look at this point here. You see this point? You see this particular red candle? That's a hammer or a pin bar. Look at it here. And if you observe, market has been going, they've been going down. But once it got to this place, there was like a kind of support. You see, from there started going up. Before it came back again. See an example of a engulfing. Look at this price, this bullish engulfing. This candle follows up this candle. It shows you the buyers are stronger. It continue to buy up a bit. So when you see those things at certain levels, the support at certain levels, it shows that buyers are stronger in the market. So those are the things you can look at. Look at this engulfing. Look at this engulfing. The moment this engulfing happened, you know that it's going to sell a bit. So, but that's just to show you what that means. So there are certain things you need to look for. Not that just say, okay, I saw engulfing, I just enter. No, there are certain things you need to look for. So we're going to learn about that. So I just want to show you chart examples. So, okay. So from the first tutorial, now these green candles represent buyers. This red represents sellers. So that's what I told you about candlesticks. So that is basically it. You can change the color. People can use different color. But that's not a class for now. So when you see price like this, going like this, that when there are more reds and it's going down, we say sellers are more in the market. When we see greens going up, we say buyers are more in the market. And basically, that's how it works. So In the next class, we'll talk about market structure. You get to understand better. So guys, see you in the next class. Bye for now.